Hey YouTube, I'm Jimmy. In this video, I'm going to go through what I believe to be the future of many cannabis stocks. Now, I recently published a video called My Three Favorite Cannabis Stocks for 2019. You can see a link in the description below for that video. And the premise of that video was that I chose companies that I believe had a chance to get bought out at a premium to their current stock market price. And that still remains true. I truly believe that the best way to make money in this industry right now is by companies that get bought out for a premium. For the companies that don't get bought out, I fear the worst. Let me illustrate my line of thinking. So here's a list of some of the more popular cannabis stocks. First, we have Canopy Growth, then we have Tilray, Aurora, Cronus, Aphria, Medman, Organigram, companies like that. Now, I've listed these companies by market cap. Here's each of their market caps. And the largest is Canopy Growth, and the smallest on our list is Organigram. Now, this is where things get interesting. Over the past 4 quarters, Canopy Growth has generated about $94 million in revenue, and Tilray has generated about $40 million in revenue. Okay, not bad. Aurora put up about $77 million, Aphria put up about $57 million, Medman had $40 million in 2018, Organigram did about $22 million. Now, this is crucial because I'm not even talking about profit. I'm talking about revenue. And if we do some simple math, we can see that if we take the market cap and we divide by revenue, well, what we end up with is the price to revenue ratio. You might also hear it called price to sales, same thing. Now, typically, I don't really like using price to revenue as a way to value a stock because when we use it, well, we're leaving out important things that are necessary to properly value a stock. Things like profitability or margins or growth or all other important factors needed to properly value the stock. But I do think that price to revenue can be decent when the industry that you're looking at isn't profitable. And that's true for the cannabis stocks on this list, or at least most of them aren't profitable. Now, this was also true for the technology companies back in the dot-com bubble, at least most of them, or railroad companies going back to the 1880s. Back then, railroad companies were the hottest investment anyone could make. They were changing the country. They were literally changing the landscape. And their stock prices showed the very same thing. Well, within a few years, the initial investments made were virtually wiped out for all of those early investors in that what turned out to be a bubble. Now, we still have railroad companies today, and many of them are considered to be some of the most solid investments you can make today. But if you were an initial investor in those companies, you would have gotten crushed. And the technology stocks before the dot-com bubble were the same way, in that many of those companies were not profitable, they had limited revenue, yet they traded at a multiple significantly higher than the revenue that they were generating. Many of the companies back then traded at 20, 30, 50, or 100 times revenue. And to put that in perspective, right now, the S&P 500 has an average price to revenue ratio of about 2x. This means that if a company has $1 billion in revenue, well, they should be worth about $2 billion. Now, 2x is just the average for all the companies in the S&P 500. Obviously, not all companies are trading there. Amazon, as an example, is trading a bit over 3x. Alibaba trades at a bit more than 6x. And this brings us to the problem and to the opportunity for cannabis stocks. First, the problem, and I think that this may be fairly obvious. These companies simply should not be trading this far above revenue. That's not to say that they can't trade up here. Obviously they can. They're doing it right now. And some of them have even done quite well. Tilray, for example, over the past year is up more than 300%, but it won't stay this way forever. And just like the dot-com bubble or the railroad bubble or any other bubble that prices companies so far above revenues, and many of these companies aren't even profitable, well, every overpricing like this eventually corrects itself. Now, I'll give you the fact that many of these companies have fantastic growth. So it would be crazy to think that they should be trading at the same multiple as the S&P 500 companies. Also the reason why you don't use price to revenue. But they should certainly be trading at some comparative number. So let's say they deserve a price to revenue multiple of about 10x. That's still a bit high, but due to the growth and the excitement around the industry, I can make a realistic case for the fact that 10x is a reasonable number. Well, that would mean that Canopy Growth, instead of trading at $46 a share, well, that should be trading at about $3 a share. Tilray should be trading at closer to $4 a share instead of the $80 it's currently trading at. Aurora will be trading at just under $1 a share instead of the $8 a share it's currently trading at. Now, I recognize that for those people who are excited about these companies and what the legalization of marijuana could mean from an investment standpoint, I understand that there's a certain amount of excitement there, but I think it's important to remember that if we're going to invest, that we need to put this type of investment in its proper bucket. And that is, we'll call it the chance bucket, because it's possible that every one of these companies double in stock price over the next year. But it's also possible they get cut in half. It's also possible they get cut by 90%. The tough part about these types of companies is that often the direction of the stock is not driven by company performance. Instead, it's tied simply to investor excitement. And investor excitement never stays. There's never been stock market excitement that has stuck around indefinitely. All things eventually pull back. Now, I'm not saying that money can't be made in cannabis stocks, but in my opinion, the way to make money with these types of stocks is to wait for them to get a big investment from one of the huge companies. Now, we already saw that when Constellation Brands took a big stake in Canopy Growth saw a big jump in their stock price. Well, this type of investment often makes cannabis stock investors feel much better. After all, Constellation Brands is a $32 billion company. They're one of the dominant players in both the wine market and the beer markets all over the globe. Well, they're not the only ones. Back in December, the $91 billion company Altria they're a cigarette company, they took a stake in Cronos. And here's the stock chart for Cronos. And this right here, this is when Altria announced the acquisition. And if we were investors in a cannabis stock, well, this is what we're after. Back in November, Cronos was trading at about $10 a share. And in early February, they were trading at nearly $30 a share. That's a triple of your money. If I had invested in this company, if I had invested in Cronos anytime before November, I'm taking my profits right now and running, because this is unlikely to keep happening for any one company. And I think that it's important for us to remember that just because these huge companies are buying cannabis stocks at crazy high valuations, that I think it's important to remember that doesn't somehow justify the valuation or validate our belief that these are good buys. They may be very good companies, but not at this price. Companies like Constellation Brands or Altria are no more immune to the hype than everyday investors like you and I. Take Mark Cuban's Broadcast.com as the perfect example. Mark Cuban sold Broadcast.com to Yahoo right before the tech bubble burst for about $5.7 billion. A few years later, Yahoo shut it down, and the investment was almost a total loss for Yahoo. So my point is that just because an enormous company is overpaying for a stock doesn't mean that we should, especially if that company isn't profitable. Because let's face it, profitability is what we're after as a company. It's what we're after as investors. So how am I personally going to invest in cannabis stocks? Well, for me, I'm sitting on the sidelines. My money is too important to me to invest in something that, sure, it's growing at an awesome rate, but it's way overvalued. I'm just going to sit here on the sidelines, and when the cannabis stock bubble bursts, and it will, well, when it does, I'll be there to pick up Aurora for $1 a share or $2 a share or whatever the company might be. It'll be at a significant discount to where it's currently trading unless they get bought up. Now, if we feel that we have to be in these stocks right now, how should we play it? Well, first off, we need to stay diversified. Maybe we could find a few of these companies that we like, and then we try to identify the companies that we think will get bought up. The three companies that I mentioned in my favorite marijuana stocks for 2019 video was Organigram, Aphria, and Canopy Growth. Canopy Growth already got huge investments from Constellation Brands, but I'm hoping that they get a pop when Constellation comes in and buys out the rest of them. I'm hoping that right now Constellation has the option to buy out the rest, hoping that happens and could pop the stock higher. And maybe we'll get lucky and end up with Constellation stock if they use stock to buy out the rest of the company. And with Organigram and Aphria, well, I thought that they could do well as part of a larger company. I think that they would make a nice fit. They would be a good acquisition candidate. But once again, we need to keep this as part of our speculative holdings. This goes in our chance bucket. These shouldn't be big holdings. And I don't want to offend anybody who loves these stocks. And up until this point, investors in cannabis stocks have been right. Many of them have moved higher, in some cases, much higher. But it won't stay this way. In investing, everything must eventually come back to the averages. And when that happens, many of these stocks are going to get creamed. So if I owned Cronus today, well, I would be selling right now. I would take my profits and walk away. And if we happen to own a stock, a cannabis stock that does really good, it gets some good news and it gets a nice jump in the stock, well, I would sell right then and walk away. Because eventually, like I say, these stocks are going to get priced like every other stock in the market. So I'm sorry if I offended anybody with my point of view. Hopefully you found this interesting. And even if you don't agree with me, let me know what you think in the comments below. And if you haven't done so already, hit the subscribe button. Thank you for sticking with me all the way to the end of the video. Good luck out there and thanks. I'll see you in the next video.